right, everyone, welcome to episode 7, I believe, of the overnight sessions. These were going to be just a weekly thing, but honestly, I said screw it. I just like doing them every day, so it is what it is. Today is probably the first time that I haven't worn a Nike jacket, if that makes, I don't know. I can't remember each episode off the top of my head, but we do have a Levi's jacket that you guys can barely see because of the green screen effect. But it's a very comfortable, dark colored cotton Levi's jacket. I kind of like this, which is kind of related to what we're going to talk about today, which is Levi stock, one of many stocks we're going to cover today. And then we have some posts on X to go over a little bit more on upcoming earnings towards the end of this month and the beginning of next month. Just a little brief, overview. I have not made a earnings list for next month yet. I'm going to do that towards the end of this month, when about the same time I do my how much I made this month video. And then what else we're going to get into? Yeah, a bunch of like fundamental and technical analysis. And then we're going to react to a YouTube video, which I thought was kind of interesting. It'll be kind of a break, still related to finance and all that, but I just like reacting to videos sometimes. But the first stock we're going to get into is, of course, Apple. So why is it on my trading section? Well, let's first go over kind of like my thought process so far. I am terrible at organizing things. If any of you guys have seen my spreadsheets, you will know that I am very bad at organizing. But my thought process behind all this is, so trading will be kind of like short-term plays I possibly could make, mostly due to earnings. And these are mostly stocks that I'm probably not sold as to, actually having a long-term position in, but still enticing enough to where I could trade, and I see something in like the smaller time frames, right? The daily is kind of neutral, like it's just a good time frame to look at in general, but lower time frames, like the 4-hourly, it was deeply oversold. We have like a bullish uptrend here, which it's like a deviation. I don't know if that's the proper term for it, I forget, but divergence. I think that's the proper term for it. I'm embarrassing myself right now on stream, or not stream, but so this indicator is in an uptrend while the stock is in a downtrend, and it's breaking new lows, right? If we zoom in, so it's breaking structure. It's possibly going to make another move like this, maybe not, but is a divergence right there. So I see like enticing smaller time frame moves on it, right? Oversold on the daily and on the weekly. It did unfortunately break that support right there, but it could possibly use old all-time highs as support. But maybe a small like short-term play. I don't have much, if not any, of Apple, so this one's a little bit more interesting to me versus some other people that probably already have like a passive position in Apple. They're probably not as interested in this as I am, but somebody that really doesn't have any Apple, I'm a little bit more interested in it. Same story for Netflix. I don't have any position in Netflix, I believe. Yeah, I don't think I have any Netflix stock in any of my accounts. Maybe I could be wrong. Maybe like a small past position that I'm not aware of. But if Netflix goes back all the way up to this gap right here, what would that be? About 40%, 36 to 40%. So just technically, Netflix is looking good. Definitely am considering making an earnings play on it, because it reports after the bell. Oh, I'm giving you guys a little preview of what I want to go over. But yeah, after the close on Tuesday. So it is another one that I will be looking into, and it could possibly go into this category right here. Possibly. There's a lot of stocks that I want to build out more of a position in. So I'm just not as sold on it. Like if I had to pick between Netflix and Disney, I'd probably pick Disney, even though Netflix might have more upside, right? More volatility. But why not both, right? Now this category, invest, is more of like stocks that I kind of want to hold for the long term. Maybe not the best setup in the short term, right? To put it into the trading category, but it still has an okay setup, right? Maybe deeply oversold stocks that are still, interesting to me to start a position in. I'm just constantly burping right now. I don't know why. So let me see. So it is, I already have this gap right here. Yeah, it could definitely see this move right here. Now, is it overnight or is it over the course of like a month? Who knows? It's breaking into, breaking this consolidation right here into more recent lows. But there is this nice gap right here. And, Ferrari is just, it's Ferrari. Are rich people going to stop buying Ferraris? I don't know. But what I do know is it's at the 200 weekly support. There's also a big buy zone right here. Now keep in mind, none of this is 100%. These are just indicators, right? Indicators have percentages, they have probabilities. None of them are 100%. But let's take a look at what Grok has to say. I was looking at CRWV, and we could possibly get into CRWV later in this video. But yeah, definitely right here, the 50 monthly too. So definitely want to build out a position. I don't have a whole lot of cash, which is a big problem. So I'm in an interesting conundrum. I am cash poor, but asset rich, which is a very interesting feeling. I hope a lot of you get to feel asset rich, but cash poor is an interesting feeling. But here we got the cash flow per share. So the cash flow yield is pretty low. It's not 1%, but dividends affordable. So growth, 60 or 26% year over year in free cash flow per share growth. That is not bad. Return on capital is great. Constantly buying back stock. So definitely Ferrari is something on my mind. And by the way, Robinhood needs to get on this. Like, why can we still not buy Ferrari stock on Robinhood? That just doesn't make any sense to me. But you can on SoFi, right? And Chevron is another stock I was looking at in my previous video, right? Great setup even in the short term. So both short term and long term looking like a good setup. They do have earnings coming up. The reason why I put it in the invest category is just because of the higher time frame setup going on right here, and that dividend yield. So as I'm waiting for that 190 to hit, I'm collecting 4% dividend. So that's why it's in this category right here. TPL, I don't think I've ran it through Grok yet for you guys. So TPL is an interesting company because they own a lot of land and they collect royalties off that land. So businesses will come in, right, like energy companies, real estate companies, whatever. They'll come in and say, hey, we want to borrow your land. And they'll say, okay, just pay us a royalty. Now, I'm overly simplifying their business, but that is basically just a quick rundown for anybody that is not familiar with this company. So right here, nice consolidation, of course, right? Nice consolidation right here. And if it breaks out, tags this next one, it's about 22% return. Low dividend, but it is what it is. I hate using the term safe stock because any stock can go down. We've seen that definitely with PayPal. So no stock is safe, but this is another one that I do not own. Definitely would like to. If it breaks to 200 month or 200 daily, which is a key moving average, that's 35% to get to that resistance zone. So definitely on that invest list. It's not in the trading because you see all these false signals here. It keeps saying buy the dip, but you're just flat, right? You're stagnant. So maybe not the best setup in the short term, but over the long term, if we make new all-time highs, maybe 5-10 years from now, that's not a bad gainer, But let's take a look at Grok. $7, $2. So it's a puny dividend. Of course, they can afford it. Return on capital, 30%. Amazing. And I did get this from this post right here. If anybody wants to go check out this guy on X, I don't really know him. I'm not promoting him. I just saw this post pop up. Net income margins. This is a chart that he's sharing with us. We got Microsoft, MSCI, MasterCard, Broadcom, Evolution Gaming. I have not heard of, but I should definitely check it out. Franco-Nevada, minerals company that has been breaking out lately. Visa is on this list, NVIDIA, of course. CME, man, I missed out on CME. But TPL coming in at number 1. So that is how it made this list here today. But yeah, so, net income margins are very high. It's a beat down stock. It did have this hype train going, but now that hype is kind of deflating and now it's just chilling right now, right? That's how I look at consolidation. It's just kind of chilling and it's picking up new buyers, right? It's getting rid of these hype investors right here, these hype traders, getting rid of, flushing them out, and now it's looking for new buyers before possibly another swing, right? So that is why it's on this list. And of course, now we have Levi's. We have Levi's right here, these moving averages converging. I did go over Levi's previously. Consolidation here, even on the weekly, it's hovering above this buy zone here. Just to tag this level right here would be 11%, but if it tags all the way up here, it's 20%. So keep it at that. I like that 20% number a little bit better. But look at these moving averages converging here, getting ready to fill that gap, right? So that's like 11% up there, 20% to get up to here. So let's just keep it right there in the middle. So good looking setup right here. We got earnings coming up. So that is how it made my invest list. Circle. So moving averages are tightening. Lots of consolidation here. It's all the way back down to IPO price. I didn't even look at Levi. So about a 5% free cash flow yield, at $20. Dividend, basically half their cash flow is dividend. Revenue is stagnant, like most clothing companies right now. Short interest is high, double digits, 10%, and they're buying back stocks. So interesting to look at for me. Circle is interesting because crypto is beat down right now. So is their stock. Could hit 100, possibly. So it's a low free cash flow yield. Short interest is only 5%. They're diluting. Unsure of return on capital, but we're guessing, or operating margin of 11%. Okay, so obviously not a whole lot of data because they just went public, but they're at least profitable somewhat, right? They're at least profitable and stable. And you could definitely still trade this. If it just tags 100, it's about 30%, 30% to get to 100. So that's how Circle has made this list. Instead of putting it in the trading category, I put it into invest because this like short-term setup right now is just kind of stagnant. It's consolidating, right? So I'm just kind of unsure about it. It's possibly better to just have a real position in it. Then we have Adobe. Look at this, deeply oversold in the short term, just constantly getting hammered. Deeply oversold on the daily. Yeah, it's just not really doing anything even on the indicator. So This looks rough. I'm not gonna lie to you guys. This looks pretty rough. It could possibly see 250. Adobe could see 250. Yeah, but that is why I put it in the invest instead of trading, because it could still go down to 250 in the short term, but I still would like a position in Adobe for the long term. So right, if I buy a little bit here at 300, a little bit more at 250, you know, it might not be the worst thing to get into. But now let's go for some stocks that have been on social media, right? And the short-term, long-term categories, these are kind of like contenders of maybe I actually want them, but we'll just kind of leave it here in the middle, if that makes any sense. Like down here is just random tickers that I see online. I just throw it into the list so I can look at it later. And then right here, the short-term, possible contenders for the trading category, and then long-term, possible contenders for the invest category is how I like to look at it. But let's look at the short-term here. So decent little setup here. You know, we could probably get a little small pump for SMR. ZETA here in the buy zone in the lower time frames. It broke out, came back down to retest. So here in the buy zone for NBIS, right? Moving averages are crossing upwards, right? We could see 126, a little 20% pump. Let's look at CRWV actually. So it did have that little buy zone right here. People are scooping them up, and it had that little breakout. So it's nice. BBAI, another stock a lot of people talk about. Consolidation here, tightening on the lower time frames, right? It's above the 200 daily. It's consolidating, possibly could pump back up. So that's about a 50% pump if it goes up. Yeah, so you see this wedging pattern here. I believe QQQ also has a similar looking one. Robinhood has a similar wedging pattern right now. So BBAI, possibly, you know, I'll throw that in there. CRWV, lots of resistance here. You know, it also had that 200. Lots of resistance there. Yeah, so I'm just unsure of CRWV at the moment. Pinterest, let's take a look. Pinterest has done nothing for a very long time. It's in a buy zone though. It is in a buy zone right now, which is why it's in the long-term potential category. But this stock is just so hard to hold, right? Because it does nothing. It's kind of like a PayPal. But it is in a buy zone right now. So that's why it's a contender. Yeah, let's run pins through. I could see myself being a shareholder at Pinterest. I think Pinterest is a lot, I guess, for me, it's just a much more enjoyable experience than something like a TikTok or an Instagram. I mean, I tried recently, especially for this channel when I'm reacting to videos, I briefly went on TikTok without logging in or signing up. I was just looking at like the top trending videos, and I'm just like, what am I looking at right now? So, but Pinterest, it's not the worst thing in the world, but it's also not as popular as TikTok. So about 5% free cash. Oh, well, actually, no, that's more than 5%. Actually, that's about 5%. Yeah. So 10% would be 250. So slightly above 5%, but still pretty decent free cash flow yield. They are still diluting though, which is interesting. I do not like that. You're profitable and you're cash flowing, but you're still diluting. Return on capital is decent. Tangible book value per share is decent. So good balance sheet, but you keep diluting. So possible. Look at this consolidation right here on the weekly. That is a good long-term. That is what I like to see. Long-term position building by the market, right? The market is building a position into the stock, at least that's what it seems like. And it could possibly break out, start gunning for all-time highs. Should I? Possibly. Let's just put it above Pinterest for now, because I could possibly see myself doing that. Another like long-term consolidation here on the monthly. It's in a buy zone here on the weekly. Nice consolidation, moving averages, and they report earnings early February. So we could see that nice pump on this, which is why it's on this list. Let's run Unum through. Yeah. Let's throw that one in here as well, because I like that. So we'll just say about a 10% free cash flow yield. Be a little conservative. Yeah, it's about 10%. Okay, slightly below 10% is the average free cash flow per share. Dividend affordable. Decent growth, just basically in line with inflation. Buying back stock, which is good. So another one that I could definitely see myself getting into. It broke that all-time highs, and now it's consolidating, waiting for another push higher. That's what I like to see. Yeah, so it cooled off right here. It cooled off. Now the moving averages are converging. A buy zone right here. Definitely something I like to see. But let's get into FNV actually. And this one was kind of another one of those missed opportunities on my part, because I've been analyzing this a long time ago, right? Like my boxes don't look like this anymore, right? They look like this now. So this is very old, I can tell. And I had these old levels marked. So I had that 126 on the dot laid out. And if I would have bought at 126, I would basically be doubled right now, right? After dividends, definitely would have been doubled. So another missed opportunity on my part, but it is what it is. So upcoming earnings, obviously we have the rest of this month to get into. Let's see. This is next week, right? So today is the 19th. I'm pretty sure we went over this. Invesco, we went over. Progressive, big insurance name reporting. 29th is going to be huge because we got Visa, MasterCard, we got the NASDAQ, we got Blackstone reporting. And the Friday, of course, American Express is going to be big news. And then next month, February, we're going to have PayPal and Chubb. That's going to be interesting. We have on the 4th a bunch of insurance companies, but we also have CME. That's the one I'm excited for. On the 5th, we have ICE. The 6th, we have SIBO. The 9th, this is more like financials. On the 10th, we have a big one, which is S&P. But the one that I'm going to be excited for, obviously, is Robinhood. And then, of course, on the 12th, we have Coinbase. So, exciting period right here. Ones that I definitely could see myself trading, other than Netflix and American Express. I could consider Visa, maybe. Maybe the NASDAQ. I already have a position in PayPal. ICE and SIBO, right? And CME. Definitely those I'll be looking forward to. And of course, Robinhood is going to be exciting. Maybe I'll trade Robinhood too, but I already have such a big position in it. And of course, rest of this week, as I've shown you guys already. Very excited for Netflix. I'm going to be paying attention to that one. What else? I think Netflix is the only one this week that I genuinely want to play. Yeah. But these are the companies, according to Patient Investor, if you guys want to check that out, with the highest net income margins. So you could definitely see myself getting into these two, TPL and CME. But the stock that I've also seen go on viral a little bit on X is NBIS, NBIS. So it was looking interesting on the charts, as we saw back here, right? It's looking interesting. Came back down to retest that old all-time highs. Now it's bouncing back. You know, a little consolidation there, right? Consolidation, possibly looking for a move higher. But the thing that kind of worries me about NBIS is their free cash flow. They flipped into positive, and then it flipped right back into negative, and now the trailing 12 month is off the charts. And this is a similar pattern that I've seen with a lot of other like very volatile hype, AI, data type of companies, tech stocks, right? That last 12 months of free cash flow has been tremendously negative. You know, we could pull up CRWV too. It's a little bit slow. Pull up CRWV. So, yeah, CRWV, obviously similar pattern that we're seeing here, negative, 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 and it just consistently grows. So that is something that worries me about a lot of these data companies, hype stocks, even though they look okay chart-wise. Let's look at BBAI. It just still kind of worries me. Because when I was buying Robinhood, they at least were flipping into profitability, and they were flipping into positive free cash flow per share, right? They were climbing back to their old, like, very high free cash flow years. Yeah, similar, looking similar, but a little bit more stable with the losses, but still BBAI losing money. So it's just the one thing that kind of prevents me from going all in on these stocks. Finally, we do have a video that I want to get into, which is this one. So this guy has been popping up on my feed. I don't know why. Maybe YouTube thinks I'm broke, but he posts like a lot of like budgeting type of videos, and he's pretty cool. You know, I'll give it a like already, but I guess we'll just let the video play, and then I'll get my thoughts on it.
This is how I make a very affordable dinner for $1.30, and that contains a protein, carb, and vegetable. I bought a 4-pack of chicken thighs for $2.54 at Trader Joe's. We're just using one here, so that's going to cost us 85 cents for our protein. Next is jasmine rice, which I bought the 3 Elephants brand a year and a half ago, $25 for 25 pounds. And that comes out to about 12 cents per bowl. For our vegetable, I'm going with beets, and it's from Amazon Fresh. Got it on sale for 99 cents. I'm going to use a third of the container, which is going to be 33 cents. High blood pressure runs in my family, and beets contain something called nitrates that can lower your blood pressure over time. I even drink the beet juice that's out of the can, so nothing goes to waste. So if you add everything up, the cost of this dinner is going to be $1.30. And the thing is, it's not a small portion. It's a pretty filling meal, and it's a nutritious one at that, at a price point that's unbeatable. This is how.
So this is just one video out of many. You know, if you guys like these types of videos, you guys can go give him a follow. Let me just click on his. So his at is Sam's Wallet, and he makes like a lot of budgeting type of videos. And I guess my reaction would be, this is good for, like, you know, obviously people trying to save money and all that. You know, having more money set aside to save and whatnot while still making like a decent meal. But just like my first impressions of him are like, not to be offensive, but this guy's a little bit older, right? And I would I assume that if he's been like this since his younger years, like through his 20s and whatnot, he has a lot of money and a lot of investments like built up, right? So he has the money to spend. And obviously his success with social media, of course, this has 187K likes. So views wise, he's popping. Comments, almost pushing 5K. So definitely, he has a lot of success. But he's still kind of, I don't know if this is just for views. I hope so, but I guess, I just don't understand it, I guess, is what I'm trying to say. Like, if people, like, what are you doing all this saving and grinding for if eventually, you don't start living life a little bit? And obviously, I've never met this guy. I'm just going off of first impressions. I'm just giving my opinion and my reaction to this. But, I guess, like, this is good for when you're young and you're trying to save as much money as possible, trying to invest as much as possible. This is great, but eventually you gotta live a little bit. You know what I mean? But I guess that's just my 2 cents. That is only worth 2 cents. But that's about 30 minutes for you guys. Comment down if there's any more tickers that I overlooked, or maybe out of the tickers that you guys saw back here. Am I just a little bit too harsh on these companies? Like, kind of give me your guys' bull case on it as to why these stocks are like so trendy. Because, they look okay chart wise, but fundamentally it's a little bit questionable, and these kind of remind me of a lot of those IPO companies from 2021 that just had like a cool ticker and a cool name, like NBIS, right? Like, that sounds really cool. Or BBAI. It sounds super cool. But fundamentally, I'm just a little bit unsure. But if I'm overlooking something, if I'm missing out, let me know in the comments. Any more tickers you guys want me to analyze, leave them below.